Good afternoon, everyone. This is Christian with PerfectStockAlert.com. We've been dead on right. Today is Tuesday, May 18th, 2010. And if you've been following us, man, you're making some coin. Just tons of it, you know. And if you're a bull, well, you're losing, and it's going to get worse. Check this out. Okay, before we get started, I have got to say thank you to every single one of you guys who've been supporting us, who's been following us, watching our nightly market analysis videos, been to our free website at perfectstockalert.com where you can see what's in my portfolio and all that stuff. Thank you very much. Today we crossed 300 subscribers on our YouTube channel. That's awesome, and we couldn't do that without your guys' support, without you, referring your friends, sharing our videos on Facebook and Twitter and YouTube, etc., MySpace. Um, so thank you very much. I love what I do, but I cannot do it without your support. It's just the way it works, okay? I've told you guys before that it costs me thousands of dollars every month to provide this service for free. I don't mind doing that as long as we continue to grow, because that would tell me at some point I will have to, I will stop paying for it. It will actually grow to a point that it can sustain itself. And it means a lot to me when you guys step up the way you guys have and in spades show your support. So thank you very much. God bless you, and please continue to keep doing that as I continue to work for you, okay? Now let's look at the Dow Jones chart here. This is a 6-month chart. Each one is cast as being one day. This isn't going to be the main focus today. It's obviously a bearish candlestick. Um, I see this is going lower. I told you guys that yesterday. I told you not to mess with this fake buy opportunity right there. It could kick around. I mean, you got the low points here. The low point of 10,436, and then today's low point was 10,482. So that technically they could say, oh, look, it's starting to trend higher right there. At the bottom line, this has not been filled. The fundamentals are still in play, and if you take a step back and just kind of look at what's going on, let's look at the Nasdaq right quick uh, hang on a second. Okay, this is the Nasdaq. You can see it better. A big old gap down here has got to be filled. Very bearish candlestick for today's activity. This is another 3 candlestick lock-in for bears almost. Uh, the main thing here is to stay short. And if you're thinking to yourself, well, she's fallen so far, she's got to bounce sooner or later. Go step back and look at the long-term chart. Let's do that real quick. One of the things we recommend at perfectstockalert.com is that you monitor different time frames at the same time, and you want to be watching them when they tell you the same thing. We've just shown you the 6-month daily chart of the Nasdaq, and it's being bearish, and here we are looking at the 4-year weekly chart, and it is also very bearish. And you'll see you've got this major selling here, then an inverted hammer formed last week, which is very bearish, and you had to short that, and then you've got this week, which is also forming sell pressure, and you've got this gap's got to fill down here. So we're looking for this to, like we said last week, to become a 3 candlestick combination that is a very strong bear indicator. Basically, you're seeing the peak form right here. So when you're thinking, well, she's come down and she should be bouncing right here, man, you're talking about this is, if I'm right, this is just the peak, okay? So in hindsight, you're going to think, I wish I'd shorted everything right here. That's my opinion, of course, but it tends to be right. And you'll notice one of the things we talk about a lot at perfectstockalert.com is stacking the odds in your favor. And one of the things you need to be monitoring is volume. If this was a weak sell-off that was just a fat-fingered guy that, oops, my bad, not really meant to happen, you would not see substantial sell volume behind that. When you see humongous volume behind any move, whether long or short, you know that smart money is making a move. They are shifting their strategy from A to B. And right here, they're going short, plain and simple. They're doing it so much so that the governments around the world are seeing this. The U.S. is changing their little rules up. I think next month they're going to be implementing a few extra, what you call them, circuit breakers to kind of slow down the selling. At the same time, Germany just came out and they're curbing their short selling rules, some of them. So not curbing the rules, but they're curbing short selling. When you see these major governments do that, they're tipping their hand. They're showing you what they know is coming, okay? And at the same time, when you see substantial volume behind the beginning of a move, smart money is tipping their hand to you. They're showing you, okay, we see a big move lower. Look at the volatility of this day alone, okay? You didn't see that back here. You saw big down days, but nothing of this size, okay? That's like this, all right? So this move is going to be monstrous. You don't just forget this and say, oh, well, it's over now. We go back to our happy little uptrend. No, don't think so, okay? Be shorting this plain and simple. Now, like we've talked about before, we need to talk about it again for anybody that's new following us. The reason why you had this major sell-off right here, wrong tool, this major sell-off right here was because of a credit problem. We had a housing or a real estate bubble that just went pop, okay? And this is not just stuck to real estate. It's basically a credit problem. And we're seeing lots and lots of people, lots of countries, lots of um, companies get caught with their pants down on this credit issue. Then we bounced. Okay, this is a technical bounce we saw. We all saw that coming. You could see it on the RSI indicator. We've gone over it before. We'll go over it again in the future. But for now, that's what happened. You had this major selling because of this credit problem. Then a substantial bounce. A lot of it was to do with technical reasons. Also, you had a lot of government spending, which, by the way, increases debt. And boom, she had this big bounce. Now, we're rolling over right here again, okay? Why? Because of the credit problem. Exact same credit problem, only before it was in companies, now it's in countries. And it's bad, okay? Let's look at the Great Depression. This is the Great Depression. Started off as a recession. 1929, you had a major sell-off, okay? And this happened because people were overextended. They had way too much debt. And they had it at that time, it was in the stock market. They were buying 10 to 1. They were going and getting a loan from the bank, for every dollar they put in, they got 10. And that basically popped and down she went. Then you had the bounce, okay? Every indicator they looked at said, oh, we're turning around here. Unemployment didn't turn around, but everything else they saw said, well, it's starting to turn around. We believe this is good. And then what happened right here? Europe. Back then you had a credit problem as well. At that time it was Germany. They defaulted on their debt and sent the markets much, 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 much lower. It's not really a matter of who did it or, whatever. It was a credit problem here. It was a credit problem here. And if you go back and look at our own situation, we can see, plain and simple, get the right tool, and maybe not. Hang on. Alright, you can see it was a credit problem here, the big bounce. Oh, what happened to unemployment? It's still high and ticking higher, and now we're rolling over. Why? Because of Europe. Where are we going? Most likely, the same fundamentals will create the same result, much lower. Okay, you cannot bail out these countries. It doesn't resolve that way. You have to pay down debt, which means you stop spending. You raise taxes on your citizens. These things are going to happen. These things will crimp the recovery. There's no two ways about that. The thing you need to be focused on is when that does happen, that major pullback. We already know, like Moody's said, if the recovery is not as robust as hoped for, we will have to downgrade the U.S. debt. When this market does this number, they're going to have to downgrade the U.S. debt. And that's going to cause its own bunch of ramifications that we need to be focused on. So be smart, be careful. I would not be long this market with your money, much less my own, and I am shorting fearlessly so. Let's have a look at the disclaimer. As always, the information provided here is our opinion only. Okay, do your own due diligence, you can read. All right. I'd like to ask everybody to please continue to refer their friends, share our videos online. We don't care if you post them on your website and make money doing so. I don't care. Just share our videos. That's it, okay? Visit us at perfectstockleader.com, see what's in my portfolio, and be watching. I'm going to be adding to that portfolio. The lower we fall, the more I will add to that portfolio as far as increasing my positions in certain things. So you can follow us along, and we will alert you whenever we make any trades whatsoever, okay? So, God bless. Enjoy the evening. Take care. We're going to keep making that money.